Thank you, Steve. All right. Kip, welcome back to F.A.C.E, buddy. Let me just get you set up here. If I was trading stocks only, I would be with Kip. How are you, Kip?
I'm great. How are you, my friend?
Good, buddy. So welcome back to F.A.C.E.
Hey, great to be with you again. Thank you very much for the invite, as always.
Yeah, great to have you. You're not going to be sharing your screen, right? You just want to talk to us. So
that works for you. I'm a simple man, Dale. I'm a simple man.
Yes, people said, Dale, you're a simpleton. So let me just pull up perhaps some stock indexes, and I want to ask you, Skip, I remember one of our interviews that there was that big sell-off in December last year. Okay, not this December, the year before, where, we had that worst month since 29. I'm just curious if, I know I read your stuff, Skip. I get your promo emails. It's very good stuff. And you talk about short-term things. Do you think there's any vulnerability in the market here right now with, what's happening with your work technically? I'm not going to ask about, fundamental events, if they're going to shake things up, or perhaps what you're expecting from the Fed. I know you have still much higher long-term objectives. I'm curious if you might be thinking about taking a little off the table here, or you're hoping there's a correction of 5 to 10% to just add on to your book.
Hoping for more of a correction here. Not sure we're going to get it because of just the strength of this earnings season. It's just, and really the Trump economic miracle. I mean, this is really just the beginning of the move higher. So,
Okay.
We put out some work about a week ago about the strength of the technicals, and how they were too strong. And we saw the strongest technicals, in other words, as a contrarian indicator, too strong since Trump was elected. Number one, and number two, this is something we really didn't see anybody else talk about that we thought was kind of a big deal. The percent of S&P 500 stocks above the 200-day reached the highest level been in 5 years, one of the 4 highest levels in the last 25 years. And that happened last week. And 84% above the 200-day. And so that really told us that we were probably going to have something like, it wouldn't matter if it was the coronavirus or Dolly Parton, got the flu. Something would have brought the markets down because it was just so overbought. And we were hoping for more of a pullback to add to positions, but Dale, it doesn't look like we're going to get it. And by the way, the last time we were this overbought was 2013, and we had a shakeout, and then we had the next year, the market was up 27%, S&P 500 up 27%, and it remained at extreme overbought levels for almost an entire year. It was kind of a crazy period. This feels like that to us.
Okay, not like this. You see where my cursor is? Because we were pretty extreme right here going into 2018 and had a couple of down weeks here. So you're saying the measurements that you're getting now are way surpassing the sentiment levels, and all the readings like new highs, new lows, AD, all of that is better now than here.
Yes.
Okay. All right. So you also were on board for this run in the metals and in the miners, and they've outperformed the metal. You and I were even talking on Twitter, and I said, well, I think we could see 1600 by March. Happened, called this a bull flag, and we've achieved it. I've looked at some COT data, and it's not a great setup in COT the way it is right now. I can't get bearish gold until I see yields bottom, and I don't think we're there yet. So still all green lights for your miner trade. And do you ever take partial profits, Kip, on runners, and take something off the table and let it run?
We do we have an options program as well called Parabolic, and that's really for those that have an interest in more short term. Our holding period there is about 2 weeks. Other than that, we're long-term investors, and we like to use dollar cost averaging on a monthly basis to add to our favorite positions. But as far as the miners go, I mean, what a great setup. Here you have back-to-back events in the Iranian missile crisis, or whatever you want to call it, and then we have this corona with Lyme virus that broke out, and gold ramps and the miners do nothing but sell off every day right at the open, just terrible action. But again, and I think I speak for you too, we're not long the miners because of some missile attack that could lead to World War III, or because of the flu, which already kills about 800,000 people a year. We don't own gold in the miners for that. We believe this is a long-term structural bull market in this group, and that 1600 is in the very near future, and that the miners on this next move, and we think we're in that move now, will break, GDX breaks 31 on its way much higher. Remember, the last two times that gold has been 1550 plus, GDX was either 53 or 30, I think 36. I think those are the two prices. So today we're at what, 20?
We're trading 28.31. And during the decline in gold from 1900 to 1050, and then even once gold bottomed, the miners are still eroding. And doesn't that have to do with, the more leverage they are, the more debt they have, and they were punished more when gold was doing nothing because of debt service, and you really have to do your due diligence before you go out and buy any individual miner?
Absolutely, and there's a great book for those who really want to get into the subject about what's happened to the management teams of these mining companies, called Groundbreaking by Ann Bridges. She may even be on the call this morning, and I'm just about halfway through it right now. But she makes an amazing case for why, when this group goes, the move is going to be incredibly explosive, because these management teams have been so beaten down, with environmental regulations and the inability to really operate in the U.S. She's talking about primarily with any kind of a savvy business technique, because the government just keeps you under their thumb. And so this lack of production from this it means the move will be that much more explosive. But I'll tell you what, it's one thing about the miners. If you've been in this group for any time at all, you got to be patient. And when the move happens, it happens real fast.
Well, isn't part of the reason is if you put the market cap together of GDX, maybe it's not even 1/10 of, or 1/100th of Apple.
Yeah, there's one in the S&P 500. There's one mining company that's in the S&P 500. That's Newmont.
Yeah.
I mean, if you're looking for the single contrarian signal to own this group, that's probably it.
Okay, so looking at gold, the oil has really been disappointing. Last year when the S&Ps were bottoming after that bad December, crude bottomed in January as well, but really the liftoff in crude compared to stock indexes was pretty feeble, and it's under pressure here. Are you looking at any opportunity in the oil patch? Because there's another group whose market cap has shrunk dramatically as far as a share of S&P.
Yeah, we're long in this group as well, and frankly, jump back in a little too soon. But if you look at where we are right now, we're as of yesterday anyway, the most oversold levels that we've been at in a year. Matter of fact, the setup between now, so I think it was I want to say May, June. I don't have that in front of me, but the setup is almost identical to the extreme oversold levels we hit across all the oscillators and technicals that we follow, almost identical. And the move that followed that was almost, it was a 3-week or a 4-week move higher by about 22%. And
okay, so you might be talking about here in WTI. Is there an ETF or an individual issue that you're measuring this with? Or
yes.
Are you doing it with the WTI?
Just using WTI, and and the two ways we're playing it right now are with the 3-time leveraged ETF for energy stocks, which is ERX. We're long that, and we also like as an individual issue, we like Petrobras.
Okay, so going down to Brazil.
That's right.
All right, so here,
past blue ribbon for the old timers.
Yeah. All right, so what's the symbol again for Petrobras. I want to take a look at it.
PBR, Pabst Blue Ribbon.
You know, you bring it up. My father worked for Pabst Blue Ribbon for 20 years.
Is that right?
Yeah, and then he got a promotion and started distributing Heineken. So
Ooh.
I don't know if you've ever had a Pabst or a Hams or any of those Midwest beer Lats. They taste like metal. Or I can't even drink one of them now. Anyway, all right, so here's ERX, and here's Petrobras. Okay. Any type of dollar play, or, you know, just a move away from U.S. assets? So you have a view on the dollar for perhaps international exposure, Kip?
That's not really our lane. I leave that to the experts like you, Dale. But, you know, I wake up every morning praying that the dollar declines. I think I'm on the same side of the team that Trump's on here. It's just, you know, the dollar's been way too high for a long time. What's your view right now?
What's that?
What's your view right now?
You know, strongly neutral. All right. So I can't get short the euro down here, and I can't buy it. Basically, you know, I'm just looking at trading opportunities. Perhaps there's one more blow off high coming here, but as you can tell, my conviction level is low, or you would have had an answer 10 sentences ago. So you know what? It's something that a lot of people have a hard time saying. I used to, but this is what I think. I don't know.
I like an honest man.
Okay, so I don't know. If I have an opinion, I'm in it. And if I don't, there are plenty of other amusement rides for me to take. So I'm pulling up your website here, Kip, and, you know, I want people to see this, and, you know, the research you do. And if people want to subscribe, you just go right to Kip Herriage. Is it .squarespace.com is your website?
Just kipherriage.com is fine. And, you know, it's funny that that's our blog page you're pulling up there. And it reminds me, it was just a week ago that both Barron's and Forbes put out pieces saying, okay, Dow Jones 30,000 is a certainty and the melt up is just underway. I mean, these guys, could they beat?
Doesn't that make you nervous? Because, well, you know, they're saying it now.
Absolutely. Well, they said it a week ago. That's when I got nervous. I mean, we knew it was about to happen because they're the worst market timers in the world.
Right. Okay. All right. So this VRA, what does it stand for again, Kip?
Vertical Research Advisory.
Okay. And you had a mentor that taught you this.
I did. Yeah. I had two great mentors. Man, it's a pretty cool story. Ted Parsons and Michael Metz with Oppenheimer.
Michael Metz, yes. God, I used to turn the volume up when he was on CNBC.
Was just a great guy. He was director of research at Oppenheimer and kind of took me under his wing when I was there. And the cool thing about both of my mentors is that their mentors worked on Wall Street during the Great Depression, during the crash and the Great Depression. And so that's kind of the lineage that I come from. And I think about those guys literally every day and the lessons they taught me. They were real big on sentiment. And they said, look, it was in the old days when I got started in 85, you know, we didn't have computers. Everybody the traders came into our office every day and just sat and talked to brokers, sat and watched the screen, you know, the scrolling screen of stock prices, and then would put their orders in through the broker in a tube system, okay? So they would come in and sit there and they said, listen, here's how you time the market. It's real simple, Kip. We want to be when nobody's sitting in here, we want to buy calls on everything, and we buy all your top blue chip stocks. But when this room gets full, sell everything. It's not more complicated than that. And that just stuck with me. So we use the sentiment indexes now in much the same way. And of course, as you know, everybody's getting bulled up again, and that's usually a sign of short-term caution.
Okay, and your targets are still 40K Dow sometime in the next couple of years, right?
50K plus.
50K plus.
Yeah, by the end of Trump's second term. Now, obviously, if Bernie gets elected, it looks like he'll be the nominee.
What do you think the chances are of that, Kip?
I think not very good, but I think the media won't present it that way. It'll be like this virus. The media will make it appear like, look at this the polls, they'll say. The polls show that Bernie's going to win, so there'll be a lot of nervousness in this market, probably in the second half of the year. But I think for the smart money, that'll be a buying opportunity. But we could see a lot of volatility and downside in the second half of this year before Trump wins re-election. You know,
part of your work, it almost sounds like you have a handle on certain cycles too, or is it just, having been on, you've seen this rodeo before? What is it?
Yeah, it's just 35 years of doing this.
Okay. Okay. So the uncertainty, we have Iowa next week, and we're off to the races. And your belief of, looks like a layup that this impeachment is going to end with acquittal. Do you think that we're going to get to hear from John Thunder Bolton?
Boy, wouldn't we love to hear from all those guys, just because it makes for great TV. But the one we want to hear from, of course, if you like Trump, or if you're Republican, conservative at all, if you're not a fan of the deep state, as Trump likes to say, would be the Biden family. But the odds of that are slim to none. Look, all of these Washington D.C. swamp creatures, they all do the business the same way. It's the deep state LLC. This is how they operate. They have their kids positioned all over the world, making money, building the family brand, building the family business. So we're not going to see any of that craziness. The Senate would not open that door, in our opinion. So this will probably end with a whimper rather than a bang.
Okay. So I know this might be a little bit controversial. We have a policy we really, even though I don't follow it, talk about politics. And I'm going to ask you this because I want to understand something, not because I'm trying to convert or proselytize or anything. But I'm curious if you could help me understand, the economy has done well under President Trump, and we have all kinds of great numbers, and stock market projections are great. But I think I know a little bit about your spirituality, Kip, and I'm wondering how you square that with things like take her out, she's going to go through some stuff, he hasn't paid the price, and to me, President Trump is much more Old Testament, an eye for an eye, than turning the other cheek. So how do you square that with your spirituality? Help me understand.
Yeah, it's a great question. I think it's something we all have to deal with. But, like Ted Parsons, my first mentor, always say we're spiritual beings having a human experience. And, I lived and worked in New York for a long time. I knew a lot of people like Trump, and it's just a very different breed. Unless you've worked in New York and know some of those older generation guys, older than me even, generation before me, then it's hard to understand a guy like that. But I know those people, and so I pay it very little notice, because I think at his core, I think he's a really good human being that loves America to his core, to his very DNA. He wants to see this country do well. So that's why I pay attention to. But I'll take it even a level a little deeper. I think for this country, and really for the world, we've had a 15-year nightmare, Dale, from 2001 to 2016. 9/11, recession, Iraq, Afghanistan wars based on bullshit WMDs that didn't exist. Yeah, George Bush, worst president of my lifetime. We can go on, the housing financial crisis, the crash. It really was a 2-year depression. Then we had Obama for 8 years, and Obamacare, which really destroyed my family's health insurance. My wife has had a long-term illness, and I cannot tell you the damage it's done to my family and the people that I know. Then we had the opioid crisis, of course, which is still killing 70,000 people a year.
Well, you know what? Obamacare saved my life, Kip. Well, because I had pre-existing conditions, and it wasn't until I was able to get Obamacare that I found out I had colorectal cancer. And so, so there are two sides to that story.
Absolutely.
Okay.
And I'm assuming that you're fully recovered.
It's been 5 years, and I'm talking to you.
Oh man, well, hallelujah on that one, brother. I didn't know that before now, so that's great news. And I couldn't agree with you more. Obama finally took on the issue of healthcare for the average American. And I couldn't agree with you more. And that, by the way, I did just say that George Bush is the worst president of my lifetime. So
that shows that it's not a Republican or Democratic thing. You're just looking at the president and what they have done or where they're going.
I'm a lifetime independent, so I voted
for a libertarian.
Yeah, right. And I was, by the way, I was on the national board of the Congressional Committee for the Libertarian National Committee for 2.5 years. and they just got crazy. I mean, it attracted a brand of crazy I had not seen before, so I had to leave that post. But libertarian, independent, that's been me. I think we're probably speaking the same language there. But anyway, I think my bottom line point is I think we're due. We've had 15-year nightmare. We're now due for 2 decades plus of prosperity and peace. And I'm very hopeful that's where we are now.
Well, let's wrap it on that, because you and I agree on that. You know, I'll go to Edwin Starr. War, good God, what is it good for? Absolutely nothing. So
Right.
remember that? You were young when that song was out, right?
You got a good voice, man. Get your band back together.
Yeah, well, you know, I do it. I'm delusional. I think I'm Elvis Presley. That only Elvis trades now. So I'm showing your vertical research advisory here, Kip, and people that want to be aggressive, because Kip he's aggressive. You know, he's not your average Payne Weber, Merrill Lynch guy that's going to say, oh, if you're in 30% bonds and cash and this, and, you know, this is Kip and his direction for the market. So I hope it's a great 2020 for you, Kip. And you know what? Thank you for fielding that question. I was torn whether or not to ask you, but you know, I guess people from New York and Chicago are different.
Well, I've known that our political views were different for a while now, and that's why I respect you. One of the reasons I respect you so much is because we should be able to have these conversations. What happened to the days where we could talk about these things openly and freely and learn from each other? It's the divisiveness of this country. That's the one thing that, you know, the media has seized on about Trump. They blame it on Trump, but man, this media has had it out for him since before he won, and you got to see both sides of that coin, you know?
Well, you know, you know, even families are being divided. So a key question is, if, you know, you have a good friend or a family member, instead of trying to win an argument,
yeah,
here's a great question. Help me to understand why. And that's what I asked Kip, and now I understand. And, you know, even liberals like Bill Maher said, you may not like the president, but you can't not like the people that like him. So thank you very much, Kip, for being here. Great trading, man, and have a great 2020, and let's get back in touch maybe around the spring. And I can't wait for the interview when I hear you talking about there might be a correction. Anyway, up and away with Kip Herriage, and you can follow him at K Herriage on Twitter. Thanks, Kip.
Thank you,
Appreciate it, buddy.
Really appreciate it, man. Have a good day.
You too. All right, everyone, that's a wrap for us. We'll see you tomorrow. And tomorrow, we'll be probably focusing on the energy complex, because I have Kirk Spano with us tomorrow. So thank you, everyone, for hanging out. Good hunting. Remember, don't just count your pips, count your blessings, and we'll see you tomorrow. Thanks again, Kip Herriage.